DRR is only for other entities which is not AIFIs, banks, NBFCs, HFCs, and even in other banks, if it is a listed, not required. If it is unlisted, then only the DRR is supposed to be created. So preferably this usually it's supposed to be created at the 30th day, or if it is created, if it is the 30th day of April or 30th April, it's supposed to be created. And if its investment is a corresponding investment amount, 15%, is supposed to deposit in a DRI account in the modes what they have given. That amount should be used only for the specific purpose. That is, it should not be used for any other purpose. It has to be used only for specific purpose of redemption. So that's how it will run. This is the mandatory provisions to be compliant. Now, let's go for when we go for accounting entry. So before accounting entry, how the interest treatment will come. So just have a look. So in interest means debenture interest, the payment of interest we would have discussed already in the investments chapter. In the investments chapter, so debenture interest, suppose if it is there at the time of, we would have discussed the debenture interest or whatever the investment chapter we would have discussed in the angle of investor. That is, if the company declares the dividend, interest, it will be received as an income. So therefore, we will show in a debentures as a part of income we would have shown. So before the break, one of the student has asked, sir, debenture certificate is a contract between the investor and the company to hold for a particular time. Got it? So it is a document, that's all. It's a debt instrument. That's what we said. It's an instrument, not the contract. It is a debt instrument, not the contract. It is an instrument, which is what we have is here. Instrument means here company is saying that in a common seal, under its common seal, in this debenture certificate, whatever is there. So much of debenture, suppose whatever the face value or premium, whatever it might be, equal to face value, it will be printed. Suppose if 50,000 worth of debenture certificate, if you would have, suppose if you have invested, so this will be given first is in your name, Mr. A. Correct? So thereafter in a securities market, it's like as same as share, you can trade it. So because in a company book lookout, the moment if the certificate is given, the company in the company books, so debentures liability is created to the extent of 50. Yeah. So anyway, company will not repay as of now. Company will pay, for example, 5 years means. So after 5 years, this certificate will become seized with whomsoever, in whomsoever hands it might be. So whether it is your hand or if you are not interested, let it be. It will be traded to securities market with Mr. Y, Z, etc., etc. It will make holder in due course. And finally, suppose if the company wants to purchase the debentures, either they can purchase from the open market and it can be cancelled, or if your shareholder is there from the direct shareholder, it can be purchased and cancelled. So in a company, it is neither change. Only in your hand, whether you are holding or if you are not interested, you can sell in a market or whatever it might be. So therefore, it will not affect internally. So once company issued allotted the debentures, in a book, it is legally created. Got it? Now it is in the hands of investee or debenture holder, whomsoever, in his hand, whether he holds or not. So for whatever, if it is transferred, the transfer document will be transferred to company. So company will update. If it is not listed, if it is listed, automatically the broker will update. The broker will transfer these debentures in the purchase, the new shareholders or new debenture holders, whomsoever they purchase, in their hands. It will keep on changing. It will keep on fluctuating the titles of the debentures. So at the end of the day, whenever they are declaring the interest, so company, whomsoever, whether it's a Mr. X, Y, Z, whomsoever it might be. So in a company book, suppose 50,000, if it is a debentures is outstanding, on that company completely declare the interest at whatever the rate. For example, on this 10% means, for example, let us make 5,000 is interest. Correct? So this interest will be paid. So it will be posted for that purpose. So whomsoever the debenture holders for that from the securities market, or if it is listed, whomsoever as on that day, one report date they will fix. Yeah. So that day as on 30th March or whatever the declaration date, as on that day in a company's members register, that is the debenture holders members register, who are all debenture holders. So that list they will take, and for them the interest warrants or whatever it might be, either it's a cash warrants, whatever it might be, it will be dispatched personally. Got it? So that's what, since whomsoever the name is appearing on the date of declaration of interest, so they will receive the complete interest. Got it? So that's why in investment chapter, as a form of investor, suppose if you would have sold the debentures or investment, whatever it might be, if you would have sold, so at the time of selling itself, you will receive broken period interest. That concept, broken period interest, you would have received at that time itself. So that time, if you would have asked that question, I would have explained, and I have explained also. Correct? So now one of the student asked this doubt now. So that's why just the information of clarity. So it is in the hands. So in a company angle, once it is allotted, liability created, only on account of redemption, that is a cancellation. Only on account of cancellation, the debenture will be cancelled, interest will be stopped. Yeah, so this is just information. So if interest is paid, so it is a entry is on debentures. In a company angle, debenture interest is a expense. It has to be finally it has to be transferred to P&L. Keep in mind. So that's what. Now let's go to the journal entries, my dear friends. Journal entries. For each and everything, let us pass the journal entries first. So I will complete in all the cases journal entry, then only I will go for problems. So in a old syllabus, this and all, each and every topic, because we had almost 17 to 22 variety of the concepts. So therefore, each and every concept, whenever journal entry is completed, I supposed to go for problem. But here they have not given adequate problems at all. So therefore, I want to complete in one stretch the accounting journal entry and accounting concepts. Let me complete in one stretch. Thereafter, so revise all these entries. Then if you go for entries, if you go for the problems, whatever is required to the relevant problem, that alone let us pull the concepts and let us conclude it. To start with now, journal entries. Journal entries. Journal entries. Now, first option, let us go it. If it is a first option, model 1. First, model 1. Model 1. Lump sum payment. Lump sum payment. Lump sum payment. So whenever it's a lump sum payment, my dear friends, so it is even though it's a model 1, first you have to ensure. So here, because it is from 2019 onwards, it is amended, my dear friends. So please ensure when you are going to redemption, so two conditions you have to check. Number one is whether sufficient DRR has been created. Whether sufficient, one thing you have to check on before redemption. Before redemption, ensure. So first condition is DRR at 10% for applicable adequacy ratio, which is applicable companies, not for all. If it is covered with DRR adequacy category, you have to create 10%. Correct? This is one. And second one, so investment of DRR, at 15%, only for other than AFI and banks. So for these two conditions you're supposed to be ensured. These two things you're supposed to ensure. Now let us go for first. Suppose if it is not created, just imagine if it is not created, then at the beginning, suppose if this year 31st March, if you are going to redeem, means this I'm talking about beginning of 1/4 of year, 1/4 of year of redemption. Beginning of year, you supposed to create at least, if it is not already created, at least now you have to create. Thereafter, you have to go for redemption at the year end. So that time, if you are going for redemption, the due entry, this and all, how to pass, that I will take care. Now let us pass this entry. First entry for creation, event number A. So video is not muted. Okay. Thank you, Zavir. Now let's go A for creation of DRR. For creation of DRR entry, since debenture redemption reserve I supposed to create, entry is, my dear friends, it is a out of free reserves I supposed to create. Out of free reserves. So therefore entry is general reserve account debit. General reserve account debit. P&L account debit to DRR account. So how much DRR I supposed to create if it is covered? At least 10% of face value of debentures outstanding. So not for all, only if it is covered with DR, that is a debenture redemption reserve adequacy criteria. This is first entry. Second one, suppose if you have not invested the amount, at least now, before this year I'm going to redeem, I'm talking about last year at least. If it is already created, fine, my dear friends. Suppose if it is a running account, it is already fine. Suppose if it is not, you have not created, then at least 1st of April this year, at the end of next year, this year, you are going to redeem. So therefore, by the beginning of this year, 1st April, at least invest that, create the investment. So therefore, these are the two fundamental conditions. So which was not there in old syllabus or earlier before revision. This was not there. Now you have to ensure that before starting redemption, these two criteria, at least 10% of DRR and at least 15% of investment has been made. So now let us take this. So for making investment of DRR, that is 15% of debentures maturing or outstanding Here all value is face value, my dear friends, face value. Face value. So entry, since I supposed to purchase the investment, correct? So since this is an investment, it is an asset. So therefore entry is investment in debenture investment or debenture investment. So or debenture redemption reserve investment account debit to bank account. Don't say, sir, it is out of free reserves. No, actual investment has to be purchased in a physical cash. So therefore it is purchasing entry. Correct? Now, so at the end of the year, suppose C on this you supposed to receive interest on debenture redemption reserve investment. It is nothing but income from investment. Correct? So usually in a old syllabus model, either if it is depends on with sinking fund, without sinking fund. If it is without sinking fund, you would have taken to P&L. If it is with the sinking fund, means you're supposed to credit to sinking fund account. That is the first income you will recognize. Thereafter you will transfer to sinking fund. This and all was there, but now it is nothing directly, since it is concept is this debenture interest. Since it is not sinking fund, concept is not there, this interest will be treated as an income. That's all. It is not reinvested. It is assumed that this investment interest is not reinvested. Only that 15%, whatever the face value into 15%, what amount is there, that is fixed. If you want more than that, you additionally invest. More than that, you create. But it is not the concept that mandatory that this investment will be this interest from DRI is reinvested. That concept is ruled out. So therefore, since it is an income from investment, transfer to P&L. That's all. It is not reinvested. It is assumed that it is not reinvested. Therefore, entry is when it is redeemed, when it is received, my dear friends. Entry is on receipt. Entry is bank account debit to interest on DRRI, debenture redemption reserve investment account. So in exam, you have to write in full, my dear friends. Please don't use short forms. So that amount. Next, at the end of the year. So since this is interest, this is income. Correct? This is supposed to be transferred to P&L. So assume that it will not be reinvested. So therefore entry is interest on DRRI account debit to P&L account. So here it is not reinvested. So it is assumed that assumption is assumption is interest received on investment is not reinvested. Hence credited to P&L as income. So whatever that 15% I created DRI, as it is, it will continue. It is not like sinking fund model. So every year, whatever the corresponding proportion of amount plus interest received, both to be reinvested, that concept is ruled out. So only 15% you will invest, and if you interested, create more than that. Otherwise, just hold it 15% for the compliance purpose, create 15% and continue till redemption. That's it. So this is normal entry. Now let us go for part 2. This is before redemption, my dear friends. This and all what these 3 entries are there. This is before redemption, ensure this situation. Now let us go for on redemption. On redemption entries. On redemption. So first entry on redemption. So first entry is my dear friends, on redemption. It is the first entry. First is always, it is a due entry. Due entry for redemption. So due entry. Since it is a due entry, whether it's a redeemed at par, premium, discount, whatever it might be. Got it? If it is redeemed at par, no profit, no loss. If it is redeemed at premium, it is a profit or loss. If it is redeemed at a discount, it is a gain. Yeah. So therefore, from here, divide it into 3 parts. Divide you across your page into 3 parts for the journal entry. Now it is due entry. First is redeemed at par. Redeemed at par. Redeemed at par. Redeemed at premium. So here redeemed at discount. Redeemed at discount. Got it? My dear friends, at the year-end redemption, actually I supposed to pass sale of investment entry. So, but after due entry, I will pass, my dear friends. After due entry, I will pass that sale of investment because I want the money. So therefore, sale of investment entry I will pass. Then I will go for payment entry. So now here drop an arrow. If it is redeemed at par, so entry is, my difference. Entry is, anyway, since it is a redemption, it has to be cancelled. There is a debenture account which is showing as a liability. I supposed to cancel. Therefore, debentures account debitor. Debentures account debit. Debentures account debit. So make this, whatever we are writing here, make this as entry number B, my dear friend. Entry number or even number, make it as 2. Yeah, sir, debentures redemption can be at a discount. Only issue should not be at a discount. Sam, redemption, if you could able to purchase at less than face value, then it is a gain. It is a gain for you. Yeah, it is your skill. If it is only at the time of issue, as per Companies Act, you cannot issue at a discount. Securities cannot be issued at discount. So debentures account, always it is a face value. So make this as event number 2, my dear friends. Event number 1 is sale of investment. Actually, first sale of investment might be there. Amount has to mobilize. Then only we have to go for redemption. Yeah. So therefore, make this entry number as 2. Entry number 1, let us pass later. Now, debentures account face value. Since it is a par, so just debenture holders account. Debenture holders account, only face value. Next, if it is premium, entry is, so debentures account debit face value. So premium on redemption account debit. This is for premium to debenture holders account. So this is what? Price, RP, redemption price. Next, Third part, drop an arrow, write down. If it is at redeemed at discount, if it is redeemed at discount, entry is again. So debentures account debit, always it has to be cancelled at face value. So since redemption discount is a profit for me, only net of amount only I have to pay to debenture holders. Therefore, to debenture holders account, debenture holders account to discount on redemption of debentures account. Directly I can credit to P&L, but for a time being I will not jump for confusion. Therefore, I have created discount, which is profit. Yeah. So for old syllabus students in old chapter, this discount directly we would have transferred to capital reserve, but now it is not. Whether it's a profit or loss on cancellation of debentures, it has to be transferred to P&L only. So no capital reserve concept, everything is a P&L only. Now this is the due entry, my dear friends. Due entry. Now under this we have to go for next is payment entry. This is A. Make it as a 2A due entry. Under this payment entry. B. Whatever be, we supposed to make the payment. Correct? Payment entry. So payment entry. So whatever be the scenario of above 3, we have to make the payment. So therefore entry in all the cases, debenture holders account debit to cash or bank account. Cash or bank account. This is event number 2, redemption due entry, payment entry. Due entry, payment entry. Got it? Now let us complete event number 1, my dear friends. Event number 1, sale of investment. Sale of debenture redemption reserve investment. Sale of debenture redemption reserve investment. So this is actually first entry. Thereafter only redemption entry will start. So sale of debenture redemption reserve. So this also possibility are of 3 types. So therefore divide it into 3 parts. That means whatever DRI you have created investment. Suppose if it is invested in a securities or whatever it might be, it can be realized. Sale value is equal to book value, more than book value, that is at profit. This is less than book value, therefore loss possible. Correct? If it is sale at investments is sold, at book value, so that means no profit, no loss. Therefore entry bank account debit to debenture redemption reserve investment account. This is only book value. Case book value. Next case, if it is a profit, I have to credit to P&L. Therefore entry, so bank account debit. It is sale price to debenture redemption reserve investment account to the extent of book value to P&L account, assuming if it is a profit. Everything has to be routed through P&L. Next, if it is loss, again it's the same. Loss has to be debited. So therefore bank account debit, always this is a sale price. Then P&L account debit, this is for loss to DRRI, debenture redemption reserve investment, to the extent of book value. You have to cancel. Book value you supposed to cancel. So this is what actually first entry. Thereafter redemption entry. Got it? Yeah. Next, my dear friends, let us go to the entry number 3. So now look out, DRI, investment account is closed. Before we go for redemption, we sold that and realized the cash. That's over. So now only thing was DRR is there. That what to do, let us think of later. Now on account of redemption, there might be either premium. So premium on redemption, or here discount on redemption. These are the 2 concepts are there. That's what profit or loss. Correct? Now here only Sam, suppose at the time of issue itself, if to the extent of premium already DRR in the name of debenture redemption premium, if you would have already created, that we will adjust here. Instead of transferring to P&L, since already by transferring to P&L, already debenture redemption premium or DRR account is already created in a old model at the time of issue, I will use that account to the extent of writing off. If it is not created, then now I will, since I have created debited now redemption premium account, that I will transfer to P&L account right now. Got it? So then discount on redemption of debentures, whatever the profit is there, that I will credit to P&L account in a normal case. So that's all here. Now writing off of third event, writing off of premium on redemption and discount on redemption. Yeah, so premium on redemption is loss, discount on redemption is profit. Correct? So divide that into two parts. So if it is already created, normally entry, my dear friends, if it is for premium on redemption, so entry is, my dear friends, that premium, suppose if it is there, you have to transfer to P&L if it is new, not created, DRR is not created, P&L account. Or if it is already created, debenture redemption premium, that is nothing but DRR. If it is already created, account debit, you have to use it. Premium on redemption of debentures account to the extent of premium, that is directly it has to be transferred to P&L. If it is already, by transferring to P&L, if you would have created any account, that account you will use to write off this provision, this situation. Yeah, if not, if you would have created now, at least now you have to charge off to P&L. Got it? Next, lastly, if it is for discount on redemption of debentures, if it is discount is there, so that you have to transfer to P&L only, not capital reserve only. There is no concept of capital reserve, only P&L. Therefore entry is discount on redemption of debentures account debit to P&L account. So because since it's a discount on redemption, so it is anticipated gain, therefore at the time of issue, damn sure I wouldn't recognize anything. So therefore it is now at today in the year of redemption, it is a profit. So therefore this I can recognize as a profit. Now let's go for event number 4. Event number 4, writing off of debenture redemption reserve. So that's all. Whatever amount you have created DRR, my dear friends, after redemption is over, that amount you have to transfer back to general reserve. If it is only current year, means you can use P&L, but it is accumulated of profits, you have to transfer to general reserve. Therefore entry debenture redemption reserve account debit to general reserve account. Yeah, so these are the entries. Ignoring interest and taxation we have ignored. So in between, whenever you have purchased back, if it is bound to pay the interest and all, that interest entry normally it will get inserted by themselves. Got it? So accept that these are the entries. Now Sam, have you understood? Have you understood the concept now? Yes. Thank you. I'm really happy. So now this is the entries, my difference in case of lump sum payment. Same thing even in case of to the extent of, look out, this is to the extent of whatever, suppose, just imagine, sir, how much DRR here I am going to release or reverse. If it is a lump sum payment, I am in a concept of lump sum payment. If the payment is lump sum, in a one shot, everything will be closed. Everything will be closed. That is, debentures is cancelled, amount is settled, DRR is closed, debenture investments is cancelled in one shot. Correct? Suppose it's the same thing in a same stream, just imagine in the form of installments. Correct? So that means entries almost same, but only thing was not full investments will be get cancelled, only part by part. That means here entries are same, but here what will happen? Now look out, just here 5 lakh is the face value. Just imagine 5 lakh means 5 lakh is the face value. If it is a one shot investment, 5 lakh into 10% is a DRR. Imagine 50,000. DRR is 50,000 and into 15% is DRI. 15%, that is 75,000 is your DRRI, debenture redemption reserve investment. So this is what you're supposed to maintain at all the time, minimum. If it is any amount, if it is less than this, then from that year, in the year in which you start to pass or to draft your accounting entry or ledger accounts in which you are about to draft, that year at least you're supposed to create. That year at least you're supposed to create. That year you're supposed to create. So now just imagine if it is a full-fledged one-shot lump sum payment, at one shot all these amounts will be maintained and it will be closed. Correct? Now imagine in the same installment basis, first year 1 5 lakh, year 1 5 lakh. Correct? So that means this figures holds good. This figures holds good. So that means the second year 2, suppose 1 lakh is redeemed. That means only 4 lakh is there. So on 4 lakh, the amount will be revised. That means it is sufficient to maintain 40,000 DRR and 70. What is that? 4 lakh into 15%, which amounts to 4 lakh into 50. It is 60,000. 60,000 in DRRI. That means what happened? 50,000 minus 40. So 10,000 you can withdraw. That is reverse in. That is the same last entry what you get. Last entry what you comes. Correct? Last entry debenture redemption reserve. That excess reserve what is required? The 10,000. The 10,000 which is nothing but 50,000 minus 40,000. The 10,000 you can reverse to general reserve. Correct? So here debenture redemption reserve investment 75,000 was there. Out of that, so 60,000 anyway you have to maintain. Therefore, only this 15,000 worth of face value alone you are supposed to dilute. That alone you have to sell it. That alone you have to sell it. Correct? So based on this, the figures will be the mandatory compliances here 10% and 15%. Based on this, the figures will be revised in case of it is redeemed partly. It is redeemed partly. Friends, are you understanding the story? Yeah, 60,000. Correct, Harsh. So like that. So originally 5 lakh was there. Now it is sufficient to maintain 60. So therefore balance 15,000 I can liquidate. I can sell the investment. So that profit or loss alone I will go for evaluation. That is the same. All the entries will same, but only thing was amount will be reversed. Amount will be revised. Got it? So this is the entry in case of what? Lump sum payment. Lump sum payment or drawing a lot. Drawing a lot. Lump sum payment or part 2 drawing a lot. So this is completely, this is either you're drawing a lot is from either from by direct, that is from through shareholders, or if you are purchasing from open market, there is a second category. But here it is a shareholder, sorry, debenture holders are involved in this category. So therefore debenture holders will come into picture. Debenture holders will come into picture. Got? So this is the first case. So keep in mind this is the only case in this case, in this first category. So 2 in a straight away it is over. Correct? Now let's come to I'll give the time to revise, my dear friends. Now come to third category. What is conversion into share? Conversion into shares. Sir, what about this is fourth category. Third category, open market, I will discuss, my dear friends. Conversion into shares. So since it is a conversion into shares, my dear friends, here just a 2 entry, that's all. 2 entry, whether it is whatever it might be. One is due entry, one is payment entry. A. So due entry is always the same. So debentures account debit, it is a face value to debenture holders account. Debenture holders account checkout. Out of this, either it is whatever it might be, either it is a par, premium, par premium or discount. So par premium or discount, accordingly this due entry will be changed. If it is here, it is assumed at par. That's what here entry has been passed. That's what here entry has been passed. Debentures are par, redeeming at par, not the allotment of shares. Here I am saying that for debenture holders, I am going to pay whatever the debenture value, face value is there. That alone I am going to repay. That's the meaning. Next is here, suppose if you are redeeming at premium, so including premium, debenture holders will get the amount like that. Whatever here, including whatever here, this due entry is there, everywhere this will holds good. It is redeemed at par, premium or discount, whatever it might be. These three entries will holds good. Next, when we go for payment entry B, so this is what allotment of shares, nothing but payment, but it is not in cash. Payment which is not in cash, so that's what not in cash. It is a cancellation without consideration. Cancellation is not within cash. Entry is my difference. So debentures holders account debit, debentures holders account debit to share capital account face value to securities premium account. This is premium. Suppose it is suppose 1,50,000 is a par value. That 1,50,000 I am 1 lakh worth of shares and 50,000 is a premium. If that is the case, so that securities premium automatically it will come. Securities premium automatically it will come. This is. Now let's go to the category 3. Category 3. Purchase from open market. Purchase from open market. So here, look out my difference. Except this purchase from open market, in all the case, first entry is, look out, if you have an investment, anyway you are going to sell. So therefore, even in a purchase from open market, first you can sell the DRI investments, what is there, that you can sell it. So then when you go for redemption, first is due entry will come. First is always that due entry will come. That is, first, like as if debentures are cancelled and it will be transferred to debenture holders account, payment due entry I will pass. Correct? But in open market, you can't purchase like you give the debentures now, I will pay the cash later. That concept will not come. That concept will not come. Murthy. That concept will not come. Murthy. That concept will not come. So because from purchase from open market, suppose if you are purchasing from the market, so first you have to pay the money in a market and you have to acquire the share, acquire the debentures. Then only after receiving the share certificate to your hand, then only either you have to cancel or whatever you want, you can do it. Correct? So therefore here first entry, my dear friends, it is the same. I'm talking about, look out, first entries in before redemption, all first entries are these three entries. You have to ensure whether DRR is 10% they have maintained, or investment 15% is there or not before that year in which they are starting to redeem, it is there or not. That three entry you have to ensure. Thereafter only on redemption, here first is sell the investments, then go for due entry, then payment entry, then profit or loss on redemption, whatever is there. Thereafter writing off of DRR. This is what you have to do it. Murthy. So this is what you're supposed to do with. Now, if it is a purchase from open market, my dear friends, so first entry is if it is a investment, the DRI is there, anyway we're supposed to sell it. Therefore, that entry here, event number 1, first is what and all entries will come, that just here, just I will sale of DRI. Sale of DRI, that is one investment, that is a event number A. First you have to show. note, profit or loss treat in a, so profit or loss, so transfer to P&L. So that's what the treatment. That's what the treatment. That is over. It is inbuilt in all the case. Whenever you go for redemption, DRRI, whatever the investment is there, that you have to sell it. So even when you go for conversion, my dear friends, so here there is a fully convertible debentures or partly convertible debentures. If it is to the extent of convertible, anyway, I would have not created DRR. Correct? So, and moreover, DRI also not would have been created, because anyway I am going to convert into shares. Therefore, sale of investment, there is no cash movement, therefore nothing is required. Therefore here nothing I have said. But except that in case of conversion into shares, in all the case DRRI, if it is covered with the relevant category, you're supposed to maintain this. Therefore this is must. So now whenever we go for this, my dear friends, so here purchase from open market. Purchase from open market, here we have a two categories. Purchase from open market. Purchase from open market. Purchase from open market. Yeah. Now here treat it as, so here purchase from open market is of two types. Is of two types. Here yeah, so this is for immediate cancellation. Immediate cancellation. Another one is not for immediate cancellation. Immediate cancellation. Immediate cancellation. So if it is not for immediate cancellation, means, my dear friends, there may be two situations. Immediate cancellation, there may be two situations. That means this is what the situation, what we call it as investment in own debentures till cancellation. Till cancellation or resale. Till cancellation or resale. So here, if it is not for immediate cancellation, I may have two options. I may have two options. One is so this is not for immediate cancellation. So this is cancelled later. Cancelled later. This is let us make for instead of cancelled later, write it as, my difference, for cancellation. This is for cancellation. This is for resale. For resale, that is reissue. So that means here for cancellation, that means it will be either cancelled at the end of year or due course. This is resale. That means it is not cancelled. That means this portion, at least this is what we call it as. If it is for cancelled, this I can call, this is redemption. This is redemption because cancelled. So this is, I will write complete. Not cancelled, it is reissued. It is not cancelled, it is same as sale of investment. So this is situation, what we call it as not redemption. This is not redemption. So only if it is cancelled, then only it is called as redemption. Correct? So this situation for immediate cancellation, this is called as redemption. Because it is cancelled. This is good, correct. So this is immediate, even at least cancelled. So investments in own debentures till it is cancelled or resale. Now, so under this, let us go for notes. Notes. Note number 1. Note number 1. Note number 1. Note number 1. So only on account of cancellation, it is said to be as redemption. Said to be as redemption. Next, note number 2. Note number 2. If it is purchased from open market, then till it is cancelled or reissued, comma, it will be treated as within quotes different thing, investment in own debentures. Investment in own debentures, which is nothing but asset. Which is nothing but asset. Next, note number 3. Note number 3. Note number 3. Interest on debentures total is expense and to the extent of interest on own debentures should be treated as income from investment and only for outsiders actual payment has to be made. Yeah. So here example. So face value of debentures outstanding is equal to 5 lakh. Face value of 6% debentures outstanding 5 lakh. So face value of own debentures held. Face value of own debentures held as investment. Let us make 2 lakh. Yeah. So it is interest for 6 month. Interest for 6 month period. Total interest expense for 6 month period. Example. So 5 lakh into 6%. 6% into 6 by 12, which is 30,000. Sorry, 15,000, I believe so. So 5 lakh into 6% is 30 divided by 2, 15,000. Correct. Now interest on own debentures. Own debentures is equal to 2 lakh into 6% into 6 by 12, which amounts to 12 by 2, 6,000. 6,000. Correct? So therefore, what is interest? Interest portion for outside debenture holders, which is 9,000. 9,000, which is nothing but 3 lakh face value. Nothing but 3 lakh face value. Correct? So therefore, for this entry, so total debenture interest is a expense because I have not yet cancelled. Only if it is cancelled, it will be treated as a debenture is cancelled. From that day, debentures are seized from the books of accounts. Till that time, it has a power. Therefore, entry is, my dear friends, total. So debenture interest account debit. Total debenture interest account debit, it is 15,000. 15,000 to debenture holders or bank account payment to outsiders, which we call this is only outsiders 9,000, and our portion I will take directly to either interest income or directly P&L credit or interest income 6,000. Only for outsiders it will be paid. Only for outsiders it will be paid. So to that extent it will be treated as a normally. It will be treated as normal. It is a case. Got it? So this is how entry will come in case of income, that is a investment on own debentures. This is how it will be there. That is out of whatever the income is there out of own investment, that will be treated as a income. So since here debentures expense also ours, income also ours, therefore only for outsiders I will pay. So for our income it will be treated as a case. Got it? This is one thing what I supposed to receive, what I supposed to explain. So then, yeah, next point number 4. Point number 4, write down. Point number 4, write down. Only on cancellation of debentures or sale of cancellation of own debentures or sale of own debentures. So profit or loss to be recognized. Profit or loss to be recognized. Yeah. Next, point number 5. Point number 5. Yeah. On purchase of debentures from open market hyphen broken period interest and X interest or cum interest price concept will apply. So refer investment chapter. Refer investment chapter. X interest, cum interest concept will apply. Yeah. So yes, my dear friends. So this is what theoretical insight of if it is purchased from open market. Got it? So here, if it is cancelled, first is up to from the date of purchase, that is at the time of purchase, whatever the things are there, for immediate cancellation, this is directly I will take to investment in own debentures and directly I will cancel in a debentures. That's holds good. So if it is cancellation or redeemed, that also I will hold good. Till that time, what interest is there, that will be treated as an income. On cancellation, profit or loss, so whatever it might be, I will debenture will be cancelled, and on account of cancellation, profit or loss every day transferred to P&L account. If it is resale, if it is resold, then it is not redemption. It is not redemption, just it is resale, purchase of investment in own debentures for a holding period. For a few period, we have holded the investment. To that extent, for that period, what interest income is there? So cash outflow was saved. That means working capital management. That's all. Instead of paying complete 100% to outsider, to some extent, since whatever the money is there, since I have purchased my own debentures, so to that extent, what happened? To some extent, cash outflow, that is in the form of interest, whatever the outflow is there, that has been saved. That we can use it for working capital. So thereafter, suppose if you don't intend, you can reissue if you get the best price, you can resell. So it is that time, it is not cancellation, it is as same as purchase of investments and sale of investment. That's how the entry will come. So on account of sale, so profit or loss you will do, it is not cancellation. That profit or loss on sale of investment also you have to recognize in a P&L. Suppose if you cancel, that time profit or loss on cancellation you will recognize in a P&L. Got it? So that's how the things will come. So for this related aspects, so few entries we supposed to take in a step by step, so that tomorrow let us discuss. So now almost theoretical way it is done. So